Welcome to another episode of Stock Review. I thought about this. Instead of just using the trend that is produced by the Depop Monster and applied into this, I decided that how about I just start my own style. Any expensive or any OG stuff always has its own cheap copy, and I don't want it to be that cheap copy. This series is going to be just stock reviews by Black Finance. Previously, we have done Anet, the Tesla, as well as Amazon. So I was thinking about since we don't have any recommendation of which stocks to review first, we will first be going through some of the major sectors or buckets of stocks such as the Mag 7, the S&P 500, the Nasdaq, Dow Jones, as well as the Russell 2000s. And we have previously done two stocks from the Mag 7, and today we'll be looking at another one, which is going to be Google. You can see I actually own Google in my another account, which I actually down dollar cost average it, and now the average cost is at 170 range. And right now, Google has great earnings with 38% surprise at the earnings report, as well as 1.15% at the revenue. The trend of this Google is that it is sort of coming back to the recovery. However, we're facing some resistance over here, and market actually was down yesterday, and we could probably see some retracement or pullback before going higher and further. In terms of PE ratio, Google is at 18 PE ratio, which at this range I would consider, hey, Google is actually quite cheap. And for me, the range of PE ranging from 20 to 30, even 35 is considered as acceptable for me to enter, and depends on whether or not the technical allows me to. And any stocks that's with P above 35 or 40 is considered as expensive. However, that situation also implies that if the technical doesn't support me to buy it, but if the technical shows that hey, it's been experiencing a huge dip and the P is still high, I might enter some small portions into that stocks. Moving on to the financial metrics of Google, you can see exponential growth in revenue, the net income of Google, as well as its free cash flow. And one of the most outstanding performance of Google is that it has more free cash flow than debt. And we also have increasing ROE and ROIC, with all the value is above 13%, which is the criteria that we wanted the stock to be before we purchase it. So now let's look at the generation from ChatGPT about the review of this Google stocks. So we'll be looking at the source of revenue, like the latest announcements, which shows its strength, their challenges, and what is their intrinsic value. The main streams of revenue income from for Alphabet is definitely the Google search. So Google search has been one of the most iconic source of revenue for Google, and we also have its services at Google Cloud, Google Network, subscriptions, platform devices, and others, which only allocate 0.3%. So we can see that over here, the main source of income is actually Google search, actually standing with 58% of the total revenue. And we can also see that the advertising remains the dominant revenue streams, and another streams of revenue, which is Google Cloud, which is currently starting to grow faster from the segment, and this is also driven by the AI infrastructure, which is a Gemini of Google, which actually in terms of revenue they also generate quite good income for them. So recent strength of course, yes, is the Q1 report of Alphabet, which they actually beat their earnings, as well as the Google Services revenue, which 77.3 billion, a 10% year-on-year increases, as well as the Google Cloud revenue with 28% year-over-year increases. So this company also announced a buyback program, and their AI services is actually quite good, which results now serving almost approximately 1.5 billion users monthly. So this showcases some of the shifting of Alphabet's into certain areas such as the Google Clouds, Google services, as well as AI, which starts to have growth in more revenue in other sectors instead of just relying on Google search. So this is why I think Google is now standing at the position of having a renovations as well as to break through their current positions and to explore more sectors as well as fields. One of the challenges of Alphabet is going to be regulatory pressures. So there's always been like monopoly issues, and you're saying like, hey, Google's advertisement business citing antitrust concerns. So the US the DOJ is just wishing that they actually break up the Googles into separate parts, just as like Meta, which can separate them into Facebook and Instagram, which this competitions are between the judges and the company is just going to be keeping on until I don't know how, when, or until I die. This thing is just going to continue and it won't work. That's all. That's my opinion. And for AI competition, rivals such as Microsoft and OpenAI are intensifying in AI, potentially impacting the Google shares market. So not only Google is actually facing this kind of problem, AI has been the trend in this market and is definitely going to be in the next 10 to 20 years. And it's kind of like back in the time when Apple has their own phone, and startingly most company starts to generate more revenue by following a trend of creating phones, softwares, cybersecurities for the phones. So this is why there's a lot of competition. However, I do think that Google's as one of the most used software as well as cloud services and its AI around the world, I think Google will be able to withstand the pressures and finally outstanding other companies. But I'm not saying that other companies are bad, it's just that Google will be able to survive in this market as well as it will be able to strive for a better price and better performance in the future. And lastly is going to be the economic uncertainty. This mentions that high capital expenditures on AI infrastructures amid global economic uncertainty raise concern on the return on investment. So this is basically the tariff side. And for Google, which is more on softwares, so excluding the fact that they need to buy more AI chips for training of the model, Google actually serves as more of a software-based company. So I don't think tariffs is actually a big deal for them. And if you look at previous years of recession, the 2020, the 2022, Google will be able to make amends and keep on generating greater revenues and net income, signifying that hey, Google is actually a recession proof, and no matter what happens, Google will be able to find its way to continue to grow. So finally, we have the intrinsic valuation, which estimates the Alphabet fair prices. So from Alpha Spread, we have the intrinsic value at 157 per share and value investing at 210 per share, as well as the Bureau Focus with the intrinsic value of 189.50 cents per share. So the market is actually currently at 164, and in my opinion, if you would like to invest in the Alphabet company, this might be a good chance. However, if I were you, I would probably wait it to retest this level before I make any purchases. However, this cannot guarantee the hidden market. Once you buy here, the market is going to start booming. That could be the case. However, maybe we can see more pullbacks into this area, and only then we consolidate before going higher. And the worst case scenario is that the market dips. That's depend on whether or not there's going to be huge news during this period of time. However, I don't think It's possible, but then anything can happen, and do be careful out there when you're trading in the stock market. If you're holding investment of these great companies, there's actually no need to worry about, because in the long run, the future 3 to 5 years, this company is most likely going to be there, and the performance aren't going to be that bad. So we can conclude that Google actually serves as one of the greatest company in the Mag 7, and it has continuously generated higher income, higher revenue, which shows its growth and performance. And plus, the stock is actually trading at near fair price value. So I would say this is at a bargain price, and maybe a little bit pullback before continuing higher, and this could be the case. So that is all the perspective that I have in this Alphabet company, and let me know what's your thoughts on it. We can share, we can help each other out to know that, hey, whether or not this company has some secret information that I don't know, that you know, and I know you don't know, we'll be able to widely learn about the concepts of the market even more. So that is all for me. If you have any more stocks that you want me to review, comment down below, like and share this video, subscribe to the channel, and I will see you on the next stock review. Yep, thank you very much.